Hi there, welcome to the next installment of the week ahead. Just going to go through the financials index today, looking at a quarterly chart, really just to give you a deeper understanding of the concept of key bars and of course the reversals as well, the buy and sell pivots, and how they all relate to each other in the development of trends and how you can use them to just inform your decision making. So this is the financials index, XFJ, and I've got a quarterly chart. So every bar you see there is 3 months trading, and this goes back to 2004. And the very simple ideas I want you to think about, and as you look at charts, is this idea of how a trend will develop and how you can use that to enter positions, but also once you get the reversals in price, so getting the buy pivots, once you get the confirmed closing above the lowest candle there, and this is actually a big sell pivot here, so that was an absolute killer on the quarterly, but still useful to know with the big selling that came after it. But the idea is, once you have these pivots in place and you are then following the trend that develops, it is this idea of the key bars as they develop within the trend. So that concept is based on thinking about once we have, for example, here with the market selling off from 2010 into 2012, we had a little sell pivot there with prices closing below the low of that highest candle, and so that went on for a couple of years, and then we have the turning back up. So we have the close there above the high of that lowest candle. So then we can say, okay, this might be turning back up here, and then let's follow it along, and we need to see it close above the high of that candle to then be the next key bar. And then you can see there's a run of key bars here with a close then on the next bar, but then this bar here is not a key bar because you can see it's closed back below the high of that previous key bar, but then this is a key bar with a close above the high. So then you can understand this idea of the key bars as they occur. And there's 1, 2, 3 quarters which weren't key bars, and all of that price action I'm saying by talking about key bars is related to that key bar, and this is what I'll explain as we go ahead. And then we've got another one there, and then another one here, and then we have the sell pivot there. And you can see prices rallying back up into that sell pivot candle before selling off again. But again, there is no new key bar down because prices didn't close below the low of that key bar. So if we had this as the key bar down, all of this price action, 1, 2, 3, 4 quarters, all related to that key bar. And then again, you're following along as it develops. And the idea of these key bars and looking at them is using my idea of how these distributions form and looking at each key bar and where prices get to in relation to that key bar afterwards. You can see prices on this key bar back in 2013 getting back to the midpoint before turning back up and rallying. we then look at the next key bar, you can see prices on that next key bar selling off back to the midpoint before rallying. That's quite interesting. This next key bar is actually quite interesting. So this is the key bar here, because prices did actually close above the high of that key bar, just a tad. Now, what did prices do? There's no key bar for 4 quarters, so that's a year's trading. And you can see prices selling off and retesting the bottom of the key bar candle, rallying to the 25%, or to that area, 25% to 618, above the key bar, finding resistance, selling off back to the midpoint of the key bar before taking off and creating a new key bar. If we then look at it from the downside, when prices were selling off, you can see we had the sell pivot back in 2015. So this is your sell pivot there, warning you that there may be some weakness ahead. And if you're looking for opportunities, you're looking for the rally going back up into that sell pivot candle where the potential opportunity can be. And if we look at what prices actually did, we've got a rally there going back to the midpoint, not quite getting to the sell zone, what I call the sell zone, which is that 75 to 87.5% retracement. It's a key area. But instead, getting to the midpoint and then selling off and retesting the bottom of that sell pivot candle, which is a key point, and getting to the 25% below, which is a very key area, finding support and turning back up. So within this period, there's 1, 2, 3, 4 quarters, so that's a year's trading. And the idea being, if we had that sell pivot and you decided you were bearish, you had plenty of time to have sold some short, possibly at the midpoint, but then taking profit back down in this area where the risk is that it could find support. And eventually prices did turn back up, and we got a couple of quarters of buying here. And this is the most interesting point, is where we're at right now, which is that prices have actually turned back down again for a second time. And we've got another quarterly sell pivot there. And if we analyze, what prices did after that, when we look at the actual sell pivot here, which is the first key bar down, what did prices do? They've sold off to that level, 25% below, so that area 25 to 618 below, very key, where you can often find support, and then rallied to pretty much bang on that sell zone of the quarterly sell pivot candle before turning back down quite strongly. And you can see where we are right now, we have another key bar down. So this is where you can start to look at these things and really understand what's going on and use it to your advantage. We have the high there, we have the key bar, first key bar down, which is the sell pivot candle there. We have the next key bar down here, which is last quarter. Now, from that point of view, if the market is going to continue trending down, we can look at the key bar to create the range around which prices are moving, and you can see that prices have rallied back to the top of the sell zone here of that key bar. So prices can keep rallying, and if we do get a close above the high of that key bar, at the end of March, which will be the end of this quarter, then things will turn back up. So this is where it can help you to give you a quick indication that momentum is shifting. But if prices, even if they spike up, let's say into that 25 to 618 above, which can happen, and fail, this next month and close below that key bar candle, this is now at risk. So this area up here is where the prices are at risk of falling over again and the trend to the downside continuing. So as someone who would want to short the market, these are the areas here where you're looking for opportunities, and that would be looking at shorter term time frames to help you understand when the short term momentum is shifting down. But by looking at these key bars and how they develop, understanding the relationships as each key bar happens, where the opportunities are as prices rally, you can see over and over again in trends. That's something that you need to understand on these longer term charts, and it can help you to find some really great risk reward opportunities. So that's it for today. I'll come back with more next week.